So we're back with another video. What we're gonna do right now is we're gonna do a trade review. I had some good moves this week that I traded. Now I will talk to y'all about the mistakes I made within them as well. But yeah, there are some moves that I was able to make in the market that they were pretty good, and I'll explain to y'all, why I believe my mistakes were mistakes. But anyways, let's get into it. So here we go with this. Now let's back up to this entire move here, because I missed this move up here, right? But let's back up here. So actually, let's just do this. Let's do this right here. Let's take all this stuff off the chart, and let's just show y'all at a base level what's been going on in the market. So remember, I was talking to y'all in my last video about a couple weeks ago how I was able to execute on this trade, and I knew I was going to get out here because of the fair value gaps that was located there. I was looking overall down here, but when I saw it slow down, I just said, all right, let me take my money and bounce. Now, I had a couple of trades in here where I was trying to get to the cash, and I thought that I seen the same type of setup here. So we'll just go through that real quick, because you got to talk about your wins and your losses, okay? So all this stuff is tabulated here on my demo account on TradingView, but a lot of these same trades I've taken in my FTMOs, just to give you that context. So right now I'm at the midway point as far as the FTMO challenge. I got a month left on my verification, and I'm ready and plan to execute, and I will be successful in achieving this verified FTMO account by August 15th. So that's what I'm calling, and I'll post a video once I get it so y'all can see the proof, you feel me? But without trying to gloat or anything, let's talk about my loss here. So on this day, you can see price begins to be in a range, right? You can see these areas here now, and I have had them tabulated by the breakers. There was a breaker on this end that I saw on a higher time frame that price was respecting over and over, and that same breaker that I usually get into this trade over here was a breaker that I was using as the two zones. And as you can see, price basically traded within the two breaker areas for the majority of last week, pretty much all the way until this week. And it wasn't until this week until some moves was made. So going over this trade on the 15-minute time frame, I really believe that I had a similar liquidity run here, which price was able to kind of overcome a little bit of the liquidity that I had basically traded down on. So I felt like maybe I had a chance to get low here, to go back down and maybe take this beyond the zone. My mistake was that price had earlier in the day had already done that, had already gone lower, and I just missed the move, right? So I was earlier in the day planning, the day before, on trying to execute on a move that would take me here, but price had already done that. So when I got back up here, instead of being in a sell program, I should have been in a buy program, because price had now already taken the sell side liquidity over here, right? Sell side liquidity, all this stuff. So, but really this major liquidity that I'm looking at over here on the downside is this area and this area. Boom, price had taken that, and so now you're thinking, oh, you should be thinking more of a buy program than a sell program. But anyways, I thought it was a sell program, and so I ended up taking a trade prematurely here in this area. Let me see where I was at. I think the area is here. Yeah, I took a trade in this area. We're going on the 5-minute chart and looking at it. And so as you can see, there's buy side liquidity right here, right? After we've already taken sell side liquidity, there's buy side liquidity within the range, even up here, that can be taken. And so I was wrong in my synopsis, and I ended up trying to take a trade using this order block, and let's kind of talk about it. Why was this trade wrong, right? Using now, let's look at the highest up close candle. This is one order block here. Now the next highest up close candle would have been these 3 consecutive candles from the bottom of this wick to the top of this one. And so at this point in time, I'm looking at this fair value gap, and you can see that there's a clean, break between where price ended up stopping and this candle right here. So I had already entered right here thinking that I was getting ready to go down. Again, I had entered here thinking that price had come up into the fair value gap in the order block and it was getting ready to go down again. Then you see, I was like, okay, maybe I'm wrong here. I went ahead and got out of this trade. And then this candle comes down. I said, oh man, I'm right. I'm gonna get back into my trade. Boom, I get in here again. Boom, it comes back up. I get in here again thinking that I'm going to come down for sell side liquidity, and then price just turns around. Now, to give you context, what was going on this day was major news. There was a Fed chair. This is on the 22nd of June. There was some Fed chair news that was very important. So that's one lesson to you all. Whenever there is Fed chair news especially, right? You got to be careful, because before the news on that day, price will be very volatile, and it may not act as you anticipate. Regardless, you have to be ready to wait for that news to pass by, right? So this is July 22. I need June 22. So on June 22nd, let's give y'all the exact news so that y'all can be wary of what type of news. So we're talking about the red high-profile news, right? But specifically Fed Chair Powell. Whenever you see Fed Chair Powell on the slate, maybe even President Biden, or you see a FOMC conference on the fundamentals for the day, the economic calendar, you got to wait until after that announcement is done. And I'm talking about basically wait 30 minutes to an hour after that speech by that person, or the FOMC minutes for that day come out, right? FOMC minutes, I don't trade on those days. Usually they come out at 2 o'clock and the whole chart is consolidating or acting weird the whole day. And so especially when there's Fed Chair Powell and FOMC minutes, or if there's just Fed Chair Powell, if he has a speech on that day, there's going to be weird price action. And so I'm going to tell y'all that essentially I missed the move. If you can see, what ended up happening is price went for buy side liquidity, and what ended up happening is price formed a fair value gap here. It traded up slightly to above, as if to try to break this level here. Traded back into the fair value gap. Here's an order block here. These two down close candles. The most recent lowest down close candles are bullish order block, right? So you got the order block, and look at that. If we're looking at this execution here, the base, the opening of that order block, even though the order block technically would start here at the top of the wick, you see how price basically touches the top of the base of that order block right there. Is beautiful. This is what ICT would call perfect symmetry in the market, right? So price comes down, touches the order block, and immediately goes back the other way at 9:30, as soon as Fed Chair Powell is talking. What should that tell me? First of all, I'm wrong. Second of all, we getting ready to go and get buy side liquidity, and that's exactly what happened. Then you see again another order block, 2 down closed candles, the most recent lowest down closed candles, a super small fair value gap. But where does price finish? The opening of, or the close of this candle and the opening of this candle, they don't move past that small fair value gap, and then boom, immediately you get a impulse to the upside. So that's another signal that you could have got in either here on this candle or here on this candle, knowing that price was getting ready to trade for buy side liquidity, which it did, and I could have taken advantage of some gains on that day instead of losing, right? But anyways, that was a losing trade that I took, and I honestly, this was me getting out of my model and spiraling tragically, and losing probably about close to $3,000 in my FTMO challenge, only because I was married to the idea instead of being open to the opposite, right? So that's another thing, is you got to be flexible with one. If you're wrong the first time, sit out, take your time, especially if there's news that hasn't yet been unfolded, hasn't yet been announced, especially Fed Chair Powell or FOMC conference minutes, right? you gotta chill out. Wait until after that stuff is announced, and like as you see, like like to tell y'all, between 9 and 11 for me, that's when the chart gets really clear. If there's gonna be a move, really between 9 a.m. and 11 a.m. in the New York session, that's when the chart gets clear. Now, similarly, in the Great British Pound, in that session, price is going to get clear around 3 to 4 a.m. because that kill zone, ICT talks about that kill zone is between 2 a.m. and 5 a.m. But the time frame after usually the news is in the London session is usually at 2 a.m. or like at 2 a.m. or like 4:30 a.m. right? So like usually 3 to 4 a.m. you will know what's going on if there's going to be a move, right? So I'll leave that here for y'all. That's an example of a mistake I made in the market that I was able to bounce back from after I made these next couple trades that y'all see on some of my other posts. All right, cool. Thanks, and catch y'all in the next one.